Welcome everyone. What a long wait has been. For those who are familiar, welcome aboard. We are a group of traders who has been trading in the background under the curtains. We have been silent for quite some time, however, it's time to let our voices out. For those who are unfamiliar, we are a group of traders who has been, as I said before, in the background trading for another group up until recently, and now it's time to get our own voice in this space, right? We need to be challenged. Those who are observing the markets differently, our approach has been the same since the lows of the 2022 October lows and hasn't changed since then, and therefore we would like to approach the markets a little different and also to portray our views mainly. Okay, you guys already know that many Wall Street analysts has been extremely bearish, and they continue to be as the doom and gloom continues. Okay, what we are trying to do here is again to do something differently and present technical arguments based on the approach from the legends of the past by respecting the technicals mainly. Right, we're not bears, neither bulls. We're only presenting trade opportunities, and therefore we can act upon the execution or the opportunity that the market presents to us traders. To bring some context for those unfamiliar, we have been tracking a pattern for a long time, since 2022, on the S&P 500 among other trading instruments. In this case, the S&P 500 is finding some turbulences after experiencing new all-time highs over and over, despite the continuous doom and gloom calls by many in the space. Okay, once again, this is not to go against them, but also is fair enough to prove or to put the other side of the story within the markets, right? It's not only about bull markets, neither bear markets. However, what we want to approach here and to do is to remove any preconceived bias that can trigger the decision-making process for many traders, right? That can at times be misguided by others, right? However, let's start with the stream. I hope you guys can hear me okay. For those who are in the chat, welcome aboard. And we're gonna do things differently, okay? Why differently? Because there has been many trading opportunities in the markets across the board, in the equities market, the crypto space, and many has been misled by others, right? The doom and gloom calls doesn't change, doesn't seem to be the case. However, one of my, I want to say mentors, but one of the technicians, veteran technicians I do follow and respect a lot, Larry Williams, has been making comments that even during his age or his stage back in the days, they have friends who have been bearish the entire time, even for 50 years. So this seems to be a pretty common behavior among participants, right? Bearish, bullish. All we want to do here is approach the markets objectively, okay? This is our goal, and if you guys want to learn more, we're going to be mentioning other steps along the way. So let's start with the chart on the S&P 500. This chart or this stream is going to be mainly based on the S&P 500, where we are currently, okay? Currently, the S&P 500 is experiencing some turbulences after printing this major W formation. For those unfamiliar, I am particularly a pattern trader, a harmonic pattern trader, also applying conventional pattern application from the legends of the past, triangles and wedges, as you guys may know, okay, and are familiar to it. So where we are on the S&P 500 after printing consecutive higher lows and higher highs, basically the definition of a bull market, even though we have many doom and gloom callers that despite the market offering and providing evidence, solid evidence that the market has been yielding trading opportunities towards the upside, the doom and gloom continues to be in the cards. To be completely fair, we're not discounting any of those potential periods of risk because it's going to occur at some point, but the idea is to trade accordingly, right? We're not trying to execute trades within a counter trending market, right? That's not how we trade. We're trying to go with the trade or the trend, right? The trend is your friend, as the saying goes, right? Pretty common behavior. So where we are, to put a little context, as I said before, this W formation, because we're bringing our work from a previous room, as you guys are not familiar, we're bringing our work from a previous room, that this is what we're trying to present to you guys in this new platform that we are experiencing among other members who follow us, respect our works, therefore this room has been created. And we of course are trying to portray the same work we have been doing for over 3 years almost. All right, okay, so let's start with the chart. The S&P 500, a W formation was previously presented. For those unfamiliar, I need to provide some context. We need to portray the conditions back then. The chart, to put into perspective, once again, was our long-awaited pending W formation, a bearish butterfly back then. Okay, this formation that you guys can observe in the chart currently was an idea presented last year in November, right? Pretty much near the lows after the major correction from the 4,500 that we were also tracking back then, from the 3,800 to the projection of 45. I'm only repeating this for those who are unfamiliar and to put some context for those new faces in the space, okay? If you are here for a long time, you're probably going to be bothered by this because I repeat over and over, but it is very important to put some context so we're all aligning within the same conditions, okay? So back then, pending W formation, right? That was a projected move from the lows after the correction from 45 to 4,100 or 3,800, right, as support levels, where the entire Wall Street analysts were calling for a doom and gloom. However, the market has been presenting higher highs and higher lows. Clear definition of a bull market as of now. So where we are now currently, the projection was from the lows, right, 4,000 or 43,000 to 51 and 5,300, right? This was a major projection that we were all tracking in our previous room. Now that those levels have been achieved, right, because that occurred after a few months, right? That was last year. This is a current price action on the S&P 500. We indeed encounter some period of turbulences, right? And also, to put more context into this conversation, we made a comment back then that our butterfly back then, okay, to put some context here, was looking for potential decline during March and April on equities, right, with the S&P being the main engine of the equities, with a bearish butterfly that completed, then searching for bullish patterns and potential momentum resumption in May. And here is where we are currently, May 29 of 2029. What occurred after the completion point of that bearish butterfly is where we need to gather as new information, right? Because patterns repeat over and over, and new information are developing in the price action as data is a constant variable. Okay, you guys already are familiar, those who are following our work. So I'm only repeating for those unfamiliar and new in this space, okay? Now that we are here, right, we were saying that looking for potential decline during March and April, that indeed occurred, right? That was the case for the S&P 500. In March, we got the PRC, the potential reversal zone of this major W formation, the projection back then to a decline. And we were looking for a bullish conditions also, that to bring more perspective or more evidence onto the table here, it is very important that we were tracking indeed those levels, okay? Now to go back into the main chart here, okay, that was our case. That was after generating the decline of the bearish butterfly, the first chart here, right? So now moving into the minor time frame, this chart represents the weekly time interval on the weekly, pending formation back then, with a decline during March and April, then momentum resumption also after the decline on the daily time frame. Here is a common or a traditional Garley pattern, the original Garley pattern from 1935, right? A period of decline constructing higher lows is a level where traders execute positions before the resumption of the trend. And currently, this is indeed where we are if we zoom in, right? Momentum resumption is what we said during May. So therefore, to bring more context onto the table, this is where we are now, okay? So to bring back the idea, that was the original Garley pattern. Now this is where we are on the S&P 500, right? The higher lows that printed an upward traction or nearly of 7%, right? Now we're continuing to see many doom and gloomers still not changing their narrative, which is absolutely fine. We need to adapt to new information and accept that we are going to have opposing views, right? This is what the market is. What some members or some participants perceive as high, others perceive as low, or vice versa, correct? So therefore, we are having the current information in the price action for the S&P 500. What we do have here on the S&P 500 on the current price action, okay, is another upward traction after the consecutive higher lows, right? Shift in sequence occurred after the decline of the bearish butterfly on the weekly. We got a nice decline, correct? Nearly 7% that was pretty much absorbed after the recent highs, right? At 53.68, I believe. So where can we go? As I said before, initially our projection, because we have been working this in the background since 2021, right? We have been only in a different group. However, now we have our own voice. We would like to be to expose our work, okay? And also to approach trading differently, or the proper way, right? Because trading is a discipline and a hard endeavor. It's not as many out there portray to be, okay? So now that we are here, where can the price action on the S&P 500 go? We can apply a pretty simple strategy, Fibonacci application, which is our core tool for harmonic ratios, for harmonic patterns once again. Since we printed, correct, the impulsive move from this segment of the pattern, 5,000 region, we can plot the anchoring point of the Fibonacci retracement tool from the lows to the highs, and also include the common areas of retracement, meaning that if we're indeed within an uptrend, or if we're continues to be within an uptrend, this correction that is currently taking place as of now will be completely normal to retest the common areas of retracement. Those ratios, for those unfamiliar, goes from the lows to the highs, ranging from the 0.382 at 52.40, the 0.50% Dow theory, that a correction of 50% will be necessary before the resumption of the trend, and the key technical level at the 0.618, ranging at 51 and 63, previous structural resistance, potentially becoming a level of support. Those of you who are familiar with our terms are already familiar, right? We broke through the prior resistance at 51, 52. Now we breach higher and potentially constructing another higher low than the previous low, okay? This can be perceived also as another higher low, and it will be completely normal to speculate a retrace or a correction, in this case, that can take place between the 0.382, which is a minimum fib retracement within bullish conditions, right? The 0.382 at 52.40, completely normal. The 50% retracement, or the 0.618. Now, if breaching, of course, the key technical level below 51 and 63, and also that can imply that something larger of a bigger magnitude is developing on the weekly potentially, right? Because we are now on the daily as of now, then we'll have new arguments, new variables to track. That will be pretty much violating the previous higher low, right? To occur or to have a shift in sequence of the consecutive higher lows that define an uptrending market as of now, okay? So again, completely normal to have a correction here. This doesn't mean we're going to completely go to the recession or the crash that many has been calling since 2021. That's not the case here. We're indeed in an uptrending market as of now, and the market need to guide us, right? The market needs to provide that information, not presenting consecutive higher highs and higher lows that define a bull market. Again, we're not bullish nor bearish here. We're trying to be objective or present the arguments objectively, right? Critically important here before we move on into this new space, okay? So now the main target that we have in mind has been since the lows of October lows, basically, right? The major targets, our main projection for the long-term trend, the primary trend, as Dow theory suggests, Charles Dow suggested back in the days, is that we can potentially still head towards the 6,000 region. Why the 6,000 region? Once again, to put more context here within this technical evidence, we need to bring back into the table where we are in the price action for the S&P 500. Our projections did not change since 2022, okay? We have been tracking, cautiously monitoring all this evidence of support levels, and we can continue to go towards the reciprocal ratio of the 50% towards the 200. That will be pretty much at 200%. What you guys may see across the board and across the space is that many are now adjusting their projection, right? Since the lows pretty much, right? We're gonna have a crash here, a crash here, a crash here, a crash here, and so on. However, our projections did not change. We have been tracking this main projection in the background once again, pretty much since October 2022. As I said before, we're not trying to sell anything here, but only approaching the technicals with evidence, okay? So therefore, that projection that you guys can observe in the chart, that we can continue to go as long as the support levels within the common areas of retracement, as I mentioned before, ranging from 0.382 to 0.618 on the daily, because we're moving into time segments or price segments. We're tracking those new support levels after this upward traction. Okay, so that level, once again, comes pretty much from December of 2022. Okay, you guys can observe here that other lows we're tracking, cautiously monitoring, once again, that the 50% retracement of the primary trend can be observed for only secondary trends. And this is where many got wrong the entire run, basically, right? So now that we have this projection at 6,162 all the way to 63,000, that continues to be a level for me particularly to monitor and to track and trade accordingly within the same directional trend, not against it, right? So that projection, as you can observe, was pretty much since December 2022, right? We printed a bullish class A divergence back then on the weekly that gave us the information we needed to be cautious and trade accordingly. Now, of course, we have been muted, but our voice needs to be out, and also we can provide our views in once again, in a proper manner, okay? So that level did not change. Here we are again. These are pretty common for those who have been following our work, but not to those who did not have any evidence of our previous work. So now that we're continuously tracking the same projections within the 6,000 region for the S&P 500, that continues to be a level for the PRC, the potential reversal zone, on a major time interval, which is a weekly, the primary trend defined between the weekly and the monthly. So again, to give back a context, we're still within an uptrending market, absolutely, right? There is no evidence that this uptrending market is presenting some technical damage. There is no violation, no penetration of consecutive higher lows as of now. Therefore, we're tracking cautiously these potential support levels that will be pretty much, if we're indeed in a corrective phase, we then apply other tools such as the trend-based FIB time, right? From the lows to the highs, back to the highs. If we're indeed within a corrective phase, this correction should last until, this is where we apply time and price and have projections for June the 6th, okay? The first week of June will be pretty much a shift in sequence or a change in character, okay? If this is indeed a correction and we start reversing from those dates. The first intersection, once again, between price and times comes from June the 6th and followed by the golden ratio or the golden zone at the 0.618 between the time axis, okay? That will be between June 6 and June 14, right? So therefore, this correction can last up until June the 6th, right? And then we may continue higher and potentially achieve our long projections within the 6,000 region, right? That once again, many are only portraying or making that projection as the market is pretty much printing evidence, right? Right? This is pretty common behavior. However, we did not change those parameters pretty much since those lows at the October lows, and December we were acting accordingly. So now that we have our own voice, those who are interested can come and check our work, because we would like to, again, prove evidence that all of our work is documented in our website, okay? So to go briefly in our site, that was previously a project for the different room. However, things change and now we are here, right? So now to go into the evidence that we mentioned, we like to portray solid evidence. So if you guys are interested, you can visit marble6.com. These are, again, our site with proven strategies. These are all the works. You can find here our work from the entire time we have been trading in the previous space. Proven evidence, you can click there and see all of our previous setups. Of course, none of these represent financial advice, but rather an interpretation of the technical information. We got our setups back from the room, okay? Everything is documented here. You guys can have a look. Click on each respective link that takes you to the trading view for each setup, and you can see there, this is the setups, and also we also have the analysis from back then, okay? Again, we are a fresh room starting now based on the massive support received mainly from members. This was not in the card, it wasn't our projection. We did not expect to have this space, but rather to continue the work after many supportive members reaching out and showing their interest in learning the true approach of technical analysis, okay, and trading mainly. So once again, if you guys are interested, you can visit us there once again. And also we have all the links if you want to be part of our Discord group, okay? Once again, we're only trying to empower traders with evidence and respecting the legends of the past, but while approaching the technicals from an unbiased perspective. Every morning, this is Marble 6. We're going to continue to do our work and present more of these live streams from time to time, but the main work is in our group, okay? Everyone, thank you for joining, and remember to live a life with an attitude of gratitude. And those who are following our work from previous years, thank you for continuing to following us, and we are going to do our best to build this differently, which is pretty much needed in the space. Right, everyone, this is Marble 6. Once again, I'll see you guys on the next one. And remember, I said before, to respect the technicals. Cheers.